The speculation here is that BlackRock is looking to launch an ETH ETF in the same way that it's in the running to launch the first Bitcoin spot ETF.
A quick shout out to our sponsor who made this video possible. Unlimit, borderless payments, local to local, local to international.
Hello everyone, welcome to Crypto with Cami, where we talk about all the biggest developments and headlines in crypto and DeFi for the past week. This episode will talk about the week of November 6th, where we had a lot of ETF activity, both for Bitcoin and also for ETH this time around. Speaking of ETH, ETH is deflationary again. There's also news about Arbitrum Staking. The NFT market is showing signs of life. And we have a fun story about Roubini coin. So let's get straight to it. Biggest news, like I mentioned, is on the ETF front. There has been a lot of speculation about the Bitcoin ETF being approved soon. But at the end of the week, ETH also got its turn to shine as BlackRock filed an Ethereum trust. It registered the iShares Ethereum trust. And this was the previous step to BlackRock filing its spot Bitcoin ETF application. So the speculation here is that BlackRock is looking to launch an ETH ETF in the same way that it's in the running to launch the first Bitcoin spot ETF. It's to be noted that there's been a few ETH ETF filings before this. In August, we had this story noting that there were 7 asset managers who filed ETH ETFs. Some of them are Bitwise, Grayscale, Vanek, ProShares, some of the same ones that are filing Bitcoin ETFs. So the big news here is that in the same way that it was a big deal for BlackRock to come into the Bitcoin ETF game, likewise for Ethereum, it's also a big deal that the world's largest asset manager is interested in offering an Ethereum product. So on the ETF topic, I really recommend you guys to check out the interview I did with Eric Balchunas. He's the one of the most prominent ETF analysts. He's at Bloomberg. He was on the podcast this week, and we had a really interesting talk where we did talk about actually the Ethereum ETF before the news of that BlackRock filing. And it's interesting what he said. He said that there already are Ether futures ETFs trading, and in the same way that the SEC got a court rejection about the Bitcoin ETF because the court said you already allowed a Bitcoin futures ETF to trade. It doesn't make any sense for you to reject a Bitcoin spot ETF. Well, Ether has a futures product in the same way that Bitcoin does. So in that same line, it wouldn't make sense for the SEC to reject an Ether spot product either. So, it probably means that once the Bitcoin ETFs are approved, Ether spot ETFs won't be so far down the line. So that's something to keep an eye out on. Of course, the Ether price reacted very well to the news and crossed $2,000 for the first time since April. On the Bitcoin ETF front, we also had a bit of movement. So another Bloomberg analyst, James Seyfarth, said that there was this window of where a potential approval could happen between November 9th and November 17th. So it's this. He said a brief window opens on November 9th for the SEC to potentially approve all 12 U.S. spot Bitcoin ETFs. And even if approvals don't arrive this month, Bloomberg analysts are forecasting a 90% chance of approval by January 10th. So, everything is pointing to a Bitcoin spot ETF being approved any minute now. Bitcoin rallied on this bullish comments. There was also this video that Gary Gensler posted, which was a video saying basically the SEC is neutral. We don't take a view on whether investors should pick a specific product. And Adam Cochran, this crypto investor, noted that it's the same kind of video that Gary Gensler posted right before approving the Bitcoin futures ETF. So, it might be another sign that the spot Bitcoin ETF is coming. And finally, another small piece of news here is that CoinDesk reported that apparently the SEC is in discussions with Grayscale to convert its Grayscale Bitcoin Trust, GBTC, into an ETF. We've reported before, I think just last week, about how the discount that GBTC has to its NAV value is narrowing. It's at the narrowest in a few months, meaning that the price of the underlying Bitcoin is getting closer to the value of the shares of the trust. There was a huge discount before because of just like the delay in approving the Bitcoin ETF, and so it means that investors wouldn't be able to convert GBTC to an ETF, and there's a lot of issues with this trust. It's because it's not paired one-to-one with Bitcoin. It's also has these different periods where institutional investors buy the trust in primary markets, and then retail investors can sell it in secondary market sales. That there's the pricing method is really inefficient. It goes through periods of high premiums and high discounts as well, depending on different drivers in the market. All of which is proves the point that the market does need a more efficient product such as a spot Bitcoin ETF. But in any case, there's movement that signals that GBTC might actually convert into an actual ETF. So interesting stuff there.
Before we continue, a quick shout out to our sponsor who made this video possible. Grow your business with Unlimited's borderless payment solution. Leverage one of the world's largest proprietary payment infrastructures available in Europe, LATAM, APAC, Africa, and the UK.
Also related to Grayscale's trust products. So Grayscale has different crypto-related trusts. There's a Chainlink one. And this week it had this amazing move. Again, like I mentioned, these trusts trade at premiums and discounts to the value of the underlying asset. And in this case, the Chainlink Trust is trading at a 200% premium to the actual Chainlink token, which indicates surging demand from Wall Street to get exposure to Chainlink. So remember that these trusts, because they are running on traditional financial rails, that asset managers are comfortable buying, they reflect demand for crypto and for the products that they're holding. In this case, the Link token. So interesting movement there, and there was this sense this week of the market heating up, that there's these green shoots starting to show in what feels like a really long bear market. And likewise, the same thing is happening with Ethereum. Activity is picking up, and that means that ETH supply is down again, as turning deflationary after it had 2 months of inflation. So that signals increased activity happening on Ethereum as well. But it's not all good. We also had news of at least 2 big Web3 companies having to lay off a large part of their team. Ava Labs, the builder of the Avalanche blockchain, said that they laid off 12% of their team. Emin Gün Sirer, the founder of Avalanche, said on Twitter. And this followed announcement that OpenSea, the biggest NFT marketplace, had to slash 50% of its workforce. So, like I said, there's these green shoots signaling maybe a bull market is starting, but crypto and Web3 is still hurting from, depressed prices and fewer users in the space. An interesting update from the ecosystem is that Arbitrum, the Ethereum Layer 2 network, has green-lighted ARB staking. So Arbitrum token holders will be able to deposit ARB tokens and get more tokens in return. The estimate is that if 50% of ARB supply is staked, the annual yield will be around 15.7%. So this was this followed a long discussion in the ARB governance forum. The initial proposal introduced inflation, like new issuance of ARB to pay staking, but that was amended. So this will be not based on new ARB inflation. And yeah, it adds more functionality to the ARB token. You can now stake it and earn yield in addition to participating in governance. At the same time, I did see some commentary which I thought was valid, which is like, this is a bit of artificial staking. Like it's these tokens aren't being used to secure the chain. Like this is not a proof of stake chain. They are, it's a mechanism to entice people to hold ARB tokens and to hopefully, I guess, increase the price. So, just something to take into account. But in any case, I'm sure this is received positively by Arbitrum token holders. Now let's move on to NFT news. We had a couple of interesting headlines this week. One was very unfortunate and a bit odd as well. Apparently there was a party for Bored Ape holders called Ape Fest, and attendees reported having their eyes really, really hurt after the party. And it looks like there was some sort of UV light at the stage that injured people who were, standing close to the stage. So that is absolutely very scary. And yeah, very unfortunate for the BAYC community. But moving on to happier NFT news, this was really a fun one. So it looks like the Simpsons had an NFT themed episode where they kind of poked fun at NFTs and Web3, and the whole episode was about the Simpsons and the Simpson kind of village or people living in this kind of like metaverse land. Bart turned into an NFT himself, but what's more interesting is that there was a collection of Simpsons themed NFTs released at the time of the episode, when the episode aired. So these are NFTs that kind of look like CryptoPunks, but it's like a mix between CryptoPunks and Simpsons characters. And so I think the mechanism was you could mint a free NFT at the time, and then the additional ones went for 0.03 ETH. Now they have all been minted, and the floor price stands at 0.028 or around $57. So pretty reasonable in case anyone wants to pick up any of these Simpson NFTs. This, was a sign that there is some life coming back to the NFT market, which has been pretty dead all year. And we're seeing here daily volume is at the highest in over 3 months. Today, November 8th. Weekly volume is slowly picking up. It's at the highest since August. So yeah, there is some volume coming back to NFTs, and yeah, this kind of Simpsons collection points to mainstream brands still, they're still interested in these tokens, even though we're in a bear market, which is a great sign. And then finally, ending the recap with on a light note, we spotted this really interesting token by Nouriel Roubini. If you guys remember, Roubini has been just a huge critic of Bitcoin, at least since 2018. He's been calling crypto a scam. So very strange to see him launching a token. So remember, Roubini called Bitcoin the mother of all bubbles and said crypto is the biggest criminal heist in human history. But now he has this project called Atlas, which is creating a portfolio of assets that are liquid, stable assets, and which also invest in climate. What is it? It's like a climate-focused investment fund, and they're putting together this portfolio of assets and then tokenizing it so that people all over the world can have access to this basket of assets. It's actually a stable coin. And they say the project is enabled by AI, ML, climate technology, and blockchain. They also mentioned how they're using real-world assets and DeFi to back the token, which is pretty mind-blowing. Someone who was railing against Bitcoin and crypto for years and years just, turns 100%, like 180 and just creates this project with all of the different buzzwords that you could think of to launch a token. So in any case, I don't know if anyone is interested in holding the ACT token, Atlas Climate Token, which aims to be a stable complementary hedge to US dollar instruments, as well as a digital store of value and a means of payment. So here it is competing against USDC and even Bitcoin. It's in the you can't make this stuff up category, but that's crypto. It's always surprising, and we'll see whether we are surprised in the next few days with a Bitcoin ETF launch. So stay tuned and hope to see you all next week for another recap.